If you opened a modern economics textbook, you'd believe money was invented by governments, that finance was designed by lawmakers, controlled by central banks, stabilized by regulations, policies, and neat mathematical models. That story is comforting, and almost completely false, because long before governments understood money, before central banks existed, before laws could enforce trust, the world's wealth was already moving, quietly, privately, through networks that never appeared in history books. This isn't the story of institutions, it's the story of networks. And once you see them, you can't unsee them. Because the truth is uncomfortable. Money has never really been controlled by governments. Governments learned to borrow control from those who already had it. To understand why these networks existed, you have to forget the modern world. Imagine a time with no central banks, no deposit insurance, no stable currencies. Coins were clipped by desperate kings. Debts vanished overnight. Borders meant danger. And sending money across countries meant trusting someone with your entire future. This wasn't just risky, it was financial chaos. And in that chaos, law meant almost nothing. Identity meant everything. If you belonged to the right group, shared language, customs, codes, and obligations, your money could travel safely across continents. If you didn't, you were on your own. That's why the first global financial systems weren't built by states, they were built by communities. One of the earliest and most powerful was the Jewish merchant diaspora. Scattered across Europe, North Africa, and the Middle East, Jewish merchants became the only people capable of trading between Christian and Muslim worlds. They spoke multiple languages. They trusted family over kings. They enforced contracts through reputation, not courts. When borders closed, they routed around them. When rulers failed, they replaced them. Their letters of credit worked because breaking trust meant exile, economic death. Loyalty was stronger than law, but they weren't alone. Across the Mediterranean, Venice and Genoa were building something just as powerful. Merchant republics that functioned like early financial machines. They invented maritime insurance, joint ventures, trade intelligence networks. Venice wasn't just a city, it was a financial operating system, built on information speed and merchant trust. Genoa went even further. Its bankers funded empires, traded sovereign risk, and financed wars the way hedge funds do today. Centuries before globalization had a name, these networks were already running it. Further north, a different kind of power emerged, the Hanseatic League. Not a country, not an empire. A network of cities acting as one. They standardized contracts, controlled ports, enforced monopolies with fleets. They outperformed kingdoms without ever becoming one. Then, far to the east, another network quietly mastered long-distance finance. The Armenian merchants of New Hulfa. Their roots stretched from Amsterdam to India, from Persia to Southeast Asia. They moved silk, silver, spices, and credit, using nothing but family trust and private arbitration. European traders trusted them more than their own governments. Because, again, where states failed to provide trust, networks created it. But the most shocking example came from an unexpected place. Not merchants, not bankers. Warrior monks, the Knights Templar. Founded to protect pilgrims, they accidentally discovered something far more powerful than weapons: financial infrastructure. They accepted deposits, issued letters of credit, created secure international transfers. A pilgrim could deposit gold in Paris and withdraw it in Jerusalem. No armies, no kings, just trust and secrecy. That made them rich, and that made them dangerous. When the King of France found himself drowning in debt, he didn't reform the system. He destroyed the network. Templars were arrested, assets seized, history rewritten. But the system didn't die. It evolved. By the late Middle Ages, financial power shifted to families. Italian banking dynasties, the Medici, Bardi, Peruzzi, and later the Fugger family in Germany. They built branch networks across Europe, used coded letters, moved money faster than kings could move armies. The Fuggers didn't just fund emperors, they decided who became one. Private credit chose public power. And once again, influence didn't come from violence. It came from information, speed, and leverage. But money isn't the only source of power. Information is. And no network controlled information better than the Jesuits. They mapped trade routes, studied local economies, collected intelligence across continents. They weren't bankers, but they advised the people who were. In a world without data, information was currency, and they had more of it than anyone. As the modern era approached, secrecy itself became a tool. Enter the Freemasons. Lodges became trust hubs for merchants, engineers, politicians, and financiers. A handshake could guarantee cooperation faster than any court. In unstable systems, private trust beats public law, every time. Then came the final evolution. The family that didn't invent global finance, but perfected it. The Rothschilds. They built the fastest private communication network in Europe. Faster than governments, faster than militaries. Sometimes faster than wars themselves. By placing family members in every major capital, they created a synchronized banking machine. Information moved first, money followed. Markets reacted last. They financed enemies simultaneously, moved capital across war zones, stabilized currencies while governments collapsed. Not because they were secret rulers, but because they understood the game better than anyone else. They weren't the beginning, they were the culmination. Because after them, governments finally tried to catch up. Central banks, stock exchanges, regulation, public systems built to absorb private power. But the networks never disappeared. They merged. And today they still exist, hiding in plain sight. Shadow banking, offshore finance, Eurodollar markets, private equity circles, venture capital networks, elite coordination forums, different names, same structure. In every modern crisis, institutions fail first, and networks decide what survives. In 2008, laws didn't save banks, relationships did. In sovereign debt crises, rules don't decide bailouts, influence does. When money moves faster than regulation, networks always win. This isn't conspiracy, it's structure. Financial systems cannot function without trust, coordination, and information, and governments still struggle to provide those at scale. So the truth is this: every public financial institution rests on a private network beneath it. And that's where real power lives. Money didn't start with governments. Governments learned to live inside systems they didn't create. And the more complex the world becomes, the more valuable access becomes. Because when the system breaks, those inside the right network survive, and everyone else pays the price. If you want to understand money, really understand it, you have to stop watching institutions and start watching the networks behind them. Subscribe, because history already showed us what's coming. And once you see the pattern, you'll never look at money the same way again.